Everyone wants to make the absolute most money in the stock market, but the problem is, one, what stocks should you invest in and when should you decide to invest in those? Here's the thing though, we are at the halfway point of 2026, and right now is the best time to consider investing and making major changes to your portfolio. I've said it all year. There are only two times that I make changes to my portfolio. It is June and it's December, and we are at the end of June. So in this video, I'm going to give you what I think are the absolute best stocks. It's right here on this list for the rest of the year, and I'm also going to tell you areas that you might want to consider selling. First, let's start off with the stocks that I like, and then we'll talk about the areas that I'm considering selling. Let's start off with Caterpillar. Caterpillar is one that I don't think I've talked too much about. CAT is the ticker symbol here. I was gonna say Applied Materials, that's a solid stock too, but the materials and industrial sector of the stock market, they are doing quite well. Caterpillar, at the time I'm doing this video, up 77% in the last 6 months, up 168% over the last year. We're not talking about it enough. Most of the market is considered or concerned with AI, and rightfully so. The thing is, we have to look at other areas that are not AI. Yes, make all your money that you want in that sector, but there are other things out there. You want to be in the places that people are not at just yet, and they pay a solid dividend on top of that. Delta Airlines, who knew? They're up 31% in the last 6 months, up 87% over the last year. They're one of the only well-performing airlines from a stock market perspective. Now, my question would be, how are they going to continue to perform as oil prices do fluctuate? But they do have less competition, so I am reluctantly optimistic. From a stock market perspective, yay. From a consumer perspective, not so great, because with Spirit Airlines up out of here, never liked Spirit to begin with, but with them gone, there's less competition. They can continue to jack up prices. Not great if I'm paying for a flight, but great as an investor. Before we continue, go to buildingbread.com/callkev. I can set up a one-on-one call with you and help to fix your portfolio, take a look at it, give you some suggestions based on where you are right now, whether it's these stocks or some additional ones that did not make the list. Now, this next one, it's quite interesting. Let me get my notes here. It is United Healthcare. Now, get this. United Healthcare is only up 26% in the last 6 months and up 35% over last year. Now, if you start to look at a chart for this, you'll see that United Healthcare has started to gain momentum. Anytime that I start to see a stock start to take off like that, my question is, well, what's going on? There are a lot of insider buyers. This is the thing that excites me. Why are the people that work at United Healthcare, and we are talking about presidents there, CEOs, the insiders, the true insiders, the big wigs, why are they buying here? And if they are, these are the people that we want to follow. They know more information. And again, there's a Harvard study in the late 90s that showed that they tend to beat the stock market when they buy. We don't have any information when they sell. They didn't tell us anything. We buy in a boat for all we know. When they buy, they tend to beat the stock market. This is an opportunity to do more research and consider buying. Something is up at United Healthcare. There was some other things up with United Healthcare a few years ago. I'm gonna leave that one alone. Next company is Northern Trust, NTRS, up 24% in the last 6 months, up 40% over the last year. Railway, it's boring, it gets the job done. That's all I got. That's all I got. Warren Buffett. So Warren Buffett's style of stock, which is what I like. Next here is AMD. I would say this one is more of a mainstream company. More of us know what AMD does, at least at this point. We also talked about Micron in the previous video. Up 150% is AMD, and up 275% over the last year. If you don't know what AMD is, they're obviously in the AI chip space. If they're not on your list, this would be your chance. If you don't already own Micron or you don't already own Nvidia, this might be the one to hop onto, since those have already taken off. And if a company is up 150%, it is likely already taken off. However, there is still some room to run here. I would encourage you, however, with AMD, they did announce earnings, if I'm not mistaken. They announced earnings maybe about a week or so ago, and that will give you a lot more information on where they are expected to move going forward. So see when they announced earnings, see what they said during that period, and that'll give you a lot more information. As I'm going to make adjustments to my portfolio, I'll make a video about that as well. I will be looking into the earnings of many of these companies, but especially AMD, to see what they are expecting, how well they did, and we'll consider adding them to my portfolio based on how they did as well. Next here is Equinix, EQIX. Now, if you have been here for a long time, one, congratulations. Thank you for still being here. It has been a ride. And if you have not been here for that long, go ahead and hit the subscribe button, because it can be beneficial. It can be beneficial to your pocket and to your mind to be here on this channel. But Equinix was a company, it's a REIT, real estate investment trust, that I used to have back in the pandemic days when it was quite good, and it might be good again. Now for this one, I think very similar to United Healthcare. They don't have insider buyers though, but it does seem to be on the early side of what we call a takeoff, right? Where I think things are taking off more so now than in the past. So it looks like we're going to be early here, up 42% in the last 6 months, up 38% over the last year. This is very similar to something like Micron, very similar to something like Intel. When I talked about Intel and it was like, it's starting to come back up, it's early, and now we look back at it 6 months later. So Equinix, this could be one where we're talking about it in June, maybe in December we could look back and say, hey look, this is doing really well at this point, but we were quite early. Now yes, up 42% in the last 6 months, it's still up, right? So we're not the earliest, but based on what the charts look like, it looks like we are still early here. Those are the ones that you want to take a look at. Now, what are the sectors that you want to pay attention to? If you look at a chart of where the stock market is right now, here's what you need to know. Obviously, artificial intelligence and technology, that is what's running the stock market. The problem though is it's very top heavy, not just AI and technology, but we know the majority of it is Micron, AMD, these are household names, Meta, maybe Broadcom if you want to throw it in there, Nvidia if I haven't said it already. Handful of companies. There are some tech companies in there that are doing well that don't get enough attention. Dig into that bin and try and find some value there that we have not mentioned, or you can go back to some of our previous videos because we have mentioned some of those stocks. So that's one. Then you slide down to the energy space. Be careful in energy. Yes, it does include oil. I'm not so keen on oil because of the volatility. You can see in the chart that yeah, it's the second highest category, but in the last week, according to this chart, when this chart was taken, it also lost a lot in the last week, even though it's the second best of the year. Based on when you see this video, when I edit it, when I post it, who knows what tweets could come out that could absolutely shake up this chart and what this chart will look like next week. Now the other piece of this is energy isn't only oil, it can also include electric stocks. One example is PNW, I think it's like Pacific Northwest. That's a stock that didn't make the list because I didn't think it was good enough, but for some people, check it out, see if that's good enough for you. Okay, it was not good enough to make this list, but for some people, again, it might work for them. I have a high bar, very high bar for me to bring it up to y'all. But that's an electric utility company that counts as energy, but not necessarily oil. A lot of people just only think of oil when it comes to energy. Next is the industrial and material space. That is where the Caterpillars of the world come into play. That's why I brought that one up. How do you separate industrial and materials? Applied material, AMAT, is one that can fall into that category as well. You can play around with those definitions if you wish, and then you go into real estate. That's where Equinix comes into play. So those are the areas where I would definitely invest more money into. Here are the areas I would consider trimming and or selling. Healthcare stocks. I always love to, and I say this on the show, I always love to have a healthcare stock in my back pocket. Apparently 2026 is not the year to have that. Now that's not, I'm not saying every single healthcare stock is one of those, but this appears not to be the case, with the exception, right, clearly, with the exception of United Healthcare. Do they know something I don't? We'll see. We'll see. But again, outside United Healthcare, there don't seem to be too many that are doing well. CVS is starting to pop So there's one that you can put on your radar. So again, maybe things are changing, but again, CVS was not good enough for it to make the list. But we'll see what happens in the next 6 months. So that is a place I may consider trimming. Financials aren't doing as well as what they were earlier in the year. And then consumer discretionary. This is a spot where we assume we're going to be, in consumer defensive as well. We assumed that early in the year, we were concerned about inflation, we were concerned about tariffs. This is where people were going to hunker down, was the Walmarts. We used to talk a ton about Walmart, and it was near the top of the stock market. Where's Walmart now? Well, it does not pop up in any of my scanners. I'm not getting as many alerts about it. It is not performing as well as it used to. What has happened, right? These are the places where I strongly would consider trimming and moving things over to other areas. This is why I take a much longer term perspective. Remember back in the days, it's been a year now, where Netflix at one time was the hottest thing on the market. It hasn't been that way, and we trimmed to get rid of Netflix a long time ago. So this is a perfect time for you to go through and adjust. If you need help to figure out what to adjust, I have too many stocks, I need to figure out what my strategy is going to be, you want to check out these videos right here.